6 months. It's almost like I don't know where to begin. Obviously, you're drilling right now at the Ana Paula project, which was formerly the flagship asset of the company. I mean, this was the big story in 2023, and it's still an important asset, no doubt about it. But now you're a totally transformed company here in October 2024. So the place I want to start with you, Charles, today is just sort of how the acquisition of the Argonaut assets came together and how you got such a low price.
Yeah, great starting point. I break the two transactions down to a smart one and a fortunate one, if I'm completely honest. Obviously the market was pretty soft at the beginning of last year, late 2022. And we worked out that we could go and buy advanced assets so much more cheaply than we could continue to develop our Unger project in Alaska, and obviously New Mexico extremely well. And we saw Ana Paula as a high-grade underground, despite everything that the PFS, the open pit permit, the 100 million spent on it. And so we thought, let's go and get a high-quality asset that has the potential to produce a huge amount of free cash flow. And we make that work. And so we agreed to the 10 million purchase price and the remaining 20 million in milestone payments. So even then, we took full advantage of a market that was completely washed out to get a high quality asset extremely cheaply and kick payments down the road. And on our plan for Ana Paula, we would have kicked through those 20 million of contingent payments, feasibility study, construction decision, commercial production, all over the next 18 months. And we would have been very happy to do that because we think Ana Paula is worth considerably more than that. Where we got a bit lucky is right place, right time, when Argonaut, after selling, there's a pretty tough road for Argonaut shareholders with the CapEx blowout for Magino. And so obviously Alamos took the Canadian asset, and then Argonaut made a decision to sell everything, to sell the Nevada assets and sell the Mexican assets. So effectively, Argonaut's gone to 3 different companies based in 3 different jurisdictions, Canada, the US, and Mexico. And where we got lucky, the assets were significantly too big for small companies, but not big enough for the large companies. Mexico was washed out from a sentiment perspective, and the Integra and the Florida Canyon deal can't close until we get the CAFESE approval, the Mexican antitrust approval, to close the transaction. So Argonaut, to a degree, were sort of forced sellers for time, wanting to close the Nevada sale, and we didn't have a lot of competition.
So how do you explain to somebody who may not be so well versed in the mining industry how you got two operating gold mines for $5 million?
Yeah, that's a good question. You need an unusual circumstance. Clearly, you need an unusual circumstance. And I think there's 2 factors in that unusual circumstance, in that Argonaut placed significantly higher value on the Nevada and Ontario assets. And even before things started going wrong from a CapEx, as a company, they were moving away from Mexico towards the US and Canada. And you see that in all their previous disclosure. Secondarily, AMLO, the president, the former president of Mexico, had made life very tough for open pit mining companies in Mexico. So it was the combination of those 2 sentiments. We took assets that the common view is that they're coming to the end of their mine life. And so in the eyes of a lot of people, they were more liabilities than opportunities. And I think 2 things clearly are different in that. One, at this gold price, we all look smarter in our transaction. There's a lot more opportunities, and we can talk about some of those. Secondarily, they're only coming to the end of their mine life because they weren't drilled or they'd stopped spending on the projects. As soon as you start putting capital into those projects, they can continue with a significantly longer mine life. So they were projects that were kind of abandoned in a jurisdiction that wasn't favored, and that's why we were able to get them so cheap.
You mentioned the gold price, and obviously that's been a boon for a lot of gold miners, especially the seniors and the mid tiers. But with Heliostar, you guys are a junior, and you've benefited quite a bit from the gold price. I'm kind of interested in your thoughts. The share price rise since June is actually more than 100% from low to high. How much of that do you think is the gold price, and how much of it is this incredible coup that you managed to pull off to get these assets at such a cheap price?
I think there's a twofold factor. One of the great things, and we can't put out production guidance until the transaction closes, so it's a bit hard to talk very plainly about the opportunity. But the business has been operating for our benefit since July the 11th, unhedged production that is cash flow positive. So that's a pretty major step. None of us were putting these kind of gold numbers into our due diligence. Anyone who's looked at any asset over the last 12 months was not putting in $2,500, $2,600 gold prices. We were all trying to make them work at $1,900, $2,000 if we were trying to get optimistic. And so clearly that margin expansion is massive. And given that we're producing, something in the order of 2,000 to 3,000 ounces of gold a month at the moment. Secondarily, one of the huge potential wins that's coming down the pipe for us is we think there's up to 20,000 ounces of gold production that we can bring online next year at La Colorada on a low-grade stockpile. That may or may not have been profitable at 2,000, but it's definitely looking profitable at these prices. So as we do the work, and we'll demonstrate that in a PFS early next year, the rising gold price gives you access to gold that you mightn't have thought was possible before. So the two-power combination of the gold you're producing is worth more, and more gold is available to you at higher gold prices.
I want to get into the projects a little bit, but before we do that, I want to ask you a couple of big picture questions. One thing I've liked about you and the way you've operated as a CEO is you've been aggressive, and you've taken some chances. You've definitely, you've benefited from the gold bull market of the last 2 years, but the fact that you've been aggressive has paid off for shareholders, especially the ones who were able to buy back in May and June at much lower prices. And now the company stands to potentially really benefit if this gold bull market keeps going. What has informed your thinking as a CEO in being so aggressive and really making moves that I don't see many other CEOs in the sector, making?
That's a very good question. I think there's two parts of it. I think from what I've seen, and it's not quite as young as I was, but I came out in the early 2000s into the middle of that bull run. And in my experience, you get these kind of once in every 7 to 10 year moves in commodity prices. If we use gold as a proxy, it's sort of, in my experience, it went from sort of 800 to 1200, and then it sat there digesting for 4 or 5 years. And then it went up to 1200, and it digested at that level for another few years. And then it went into the 1800 to 2000 range for the last few years, and now we're seeing another move up. And so we saw the last 18 months as one of those kind of once in every 7 to 10 year events where you can pay super depressed equity prices for a step change in the commodity price. And there's times when you shouldn't be conservative and you should focus on maintaining that margin in your gold price, which is a cost focus. And there's times where you get aggressive. Like we bought these ounces for less than $2 an ounce, and nearly all the peers are trading at $20 an ounce. So it's not a blind aggressive strategy. It was our view that the market was in one of those once a decade kind of events, and we wanted to take full advantage of that window. And I'd argue that window's probably been closing over the last couple of months, as now there is a small appetite for gold equities and everyone's starting to get a bit of a lift.
Yeah, I mean, frankly, it's been a bit of an absurd situation. There's a number of juniors with feasibility stage, permitting stage assets that have ounces valued less than $10 an ounce, still with this 26.80 gold price, but $2 an ounce. I mean, it's sort of like, if you don't do this deal, then why are you even a gold company, right?
Yep.
Um, so the reason why, and you alluded to this a bit earlier, one of the main reasons why the company had this opportunity was because of the country risk in Mexico, and the former president, uh, he's gone now. The transition just happened in the last couple of days, but now you have Scheinbaum, who's his protege, essentially. The former president was not a friend of the mining industry in Mexico, and fears really became palpable a couple months ago. Like, I remember, I forget, what was it, June? I woke up one morning and all the Mexican juniors were down huge, and if you had an open pit project, you're down 40%. Um, it seems like things have calmed down a bit because he wasn't able to jam through the the bill that he was trying to, or that he was at least talking about and threatening. It's unclear what Scheinbaum is going to do, but it seems like she's got bigger fish to fry with the country in a serious crisis, and the government running huge deficits. So by cutting off more of government funding, by hurting the mining industry further, probably would not be in her benefit at this point in time. But what's your take on the politics there in Mexico?
It's a so you're right, and I have mixed feelings about it in the sense that if it wasn't for that phase, I might be one of the only few mining companies in the world that has to acknowledge that AMLO's role in us getting these assets at these prices. We wouldn't have been able to get these. We would have been completely outcompeted for these assets if it wasn't for that. So I think about it with kind of mixed blessings going forward. There's everything you've talked about is the overwhelming theme. I won't go into specifics of conversations I've had that are private with different people, but there's definitely at worst like taking the foot off the gas of making our life harder, at best materially improving it. But the way I look at it is our business case for building the expansion of the Colorado, which we'll talk about, building Ana Paula, that's a pathway to 150,000 ounce a year annual production for us as a company that is either permitted or permittable under the current regime in Mexico. So we build our business case in the world that we live in today. And I don't think it's too hard for us to justify a 200-300 million valuation as we bring that online and deliver those. Then we've got all this optionality above that. Should we be able to expand the pits that we've purchased that don't have permits? There's probably an extra 100,000 ounces of production over the next 2 years if we can expand those permits. So I think that the signs are significantly more promising, and you're seeing that in share prices of Mexican-focused companies. We've got a base case that exists and works in Mexico today. If we can start permitting some of the expansions of our pits, this will be the greatest deal I'll ever do in my life.
Yeah, I mean, just looking at the assets, the quality of the assets, and the potential for more upside as you expand these assets and build. You build Ana Paula in late 2025, and you restart one of the pits that you acquired. I mean, this is a company making transaction. There's absolutely no question about it. Now it's up to the execution, which is always tricky for a junior. So I want to walk through a couple of the assets, or a few of the assets. What would you call the company's flagship asset now?
It's a good. So Ana Paula, I think, remains our flagship. And I've used the analogy; it's the Ferrari in our portfolio.
Hmm.
But La Colorada is going to be an underrated gem that's coming along the line. So I'd almost give them co-billing right now because of the ounces that we're going to get out of La Colorada. Starting with stepping up next year, and then Ana Paula coming right on its heels. They're two very material projects for us.
So La Colorada, what kind of output can that do in a year?
So let's talk in generalities here. It's a little tough to talk plainly until the transaction closes and we have some updated tech reports. But right now the assets are producing in the order of next year. I don't think it's going to be too hard to get something in the order of 20,000 ounces just from the continued operation of the assets. And then I touched on that we found a low-grade stockpile that has the potential to double that. And we'll be in a position in the very beginning of January to put that out formally. We'll have all the resource done, the study behind it to share that. And so we're talking significantly higher ounce production than I think anyone was expecting. Then the expansion of the Creston pit, it has a 380,000 ounce reserve, and that's permitted to expand, and Argonaut just stopped doing that sustaining stripping. A bit like a farmer stopped putting fertilizer out one year to make a bit more money while Magino needed cash, but ultimately then you have to double down later and fix that. So there's a capital of expenditure of something in the order of 50 million that'll bring on something like 6 or 7 years at 50,000 ounce a year production. So we think we can have that coming online mid next year, which is immediate, steady state, longer mine life production. And then at the end of next year, we'll bring Ana Paula on, and we're going to bring that on in 2 steps: an initial 50,000 ounce step, and then double the capacity up to 100,000 ounces. So we think we're a good chance of being at about 100,000 ounce a year production in 2 years, growing to 150 shortly after that.
So with the high grade panel at the Ana Paula project, you're going to drill 7 holes there, or you're in the process of drilling 7 holes there at the high grade panel. What's the timeline to sort of get that ramp down there to that high grade zone?
For those who've followed Heliostar from before the recent transaction, we were pressing ahead to push a decline. So there's a third of a decline, if that makes sense to anyone listening. They were planning to go down 1,200 meters, but unfortunately for them, their Nevada asset, a company called Alio, meant that they stopped that decline. So to complete that decline is about a $10 million expenditure, and we were going down the path of collecting a bulk sample that we then planned to permit into steady state production. We'd secured a $20 million debt facility. We were going to give up effectively the economics on about 12,000 ounces of gold and push ahead with that. What this transaction's allowed us to do is, in some senses, put the horse back in front of the cart. Because we're bringing the Colorada online, because we have cash flow today, we're going to get the permit and deliver a feasibility study by the end of next year, and then pull the trigger on Ana Paula. We're doing that ultimately because we think it lowers our cost of capital. For example, we didn't end up closing that debt facility. We replaced it with 2 facilities on significantly better terms. The power of production means that you can borrow money at a much better rate. And so that we think by having the Colorada come online as step 1, and by getting the permit and completing the feasibility study, we can build Ana Paula a lot more cheaply than we were as a standalone company.
So you have this 200,000, actually it's more than 200,000 ounces at an average grade of more than 10 grams per ton, sort of subzone there in the high grade panel. And that's going to be the first target area to be mined once this, you get that the ramp extended down into the ore body further. Right now you're drilling, and the news release that you put out just recently, you sort of talked about you're in the midst of phase 1, and you're also going to drill 2 step out holes to the west. Can you tell us about that and why those are important?
Yeah, so like the high grade panel is spectacular. It's 60 meters wide, averaging about 5.5 grams per ton gold, consistent, evenly spread gold. You touched on that 200,000 ounce high grade zone, perfectly placed from a mining perspective to come in really early in the mine life. Like, we're talking about the potential for $100 a ton mining and processing costs, and today $400 to $500 a ton value of the rock, like extremely high margin material, which has the potential to lead to incredibly quick paybacks. But the high grade panel is still open, and so the 5,000 meter drill program that we started about 4 weeks ago is aiming of stepping down and down dip and down plunge, and some big step outs, like up to 200 meter step outs. We think we can connect to sort of a mid-level zone of mineralization for people who look at the presentation, potentially with that high-grade panel. So based on what we learnt last year, we're taking some shots to try and take some big step outs to see if we can add some more ounces quickly. We probably can expect to have first results coming in sort of the third week of October. So 2 to 3 weeks away from now, we'll start to see those results come back in, and we'll then follow them up with a second phase after Christmas, based on the results of the first set of drill holes.
So is this down dip to the west, or is this just exactly to the west at this at the same elevation?
It's sort of plunging down, so it's down dip to the west, so
Down dip to
immediately
the west.
underneath and down dip. But this is shallow. Like we're talking about, I think the deepest hole we drilled last year was about 300 meters. Like all of that mineralization was within 300 meters of surface. These are really shallow drill holes and really shallow mineralization.
It seems like you guys get good progress down there, when you drill. Like you start to drill and you've done 5,000 meters in a couple of weeks. Like I've always been impressed with how fast it goes down there. I guess it's it's good rock. And,
Yeah,
we've got a good team of drillers.
Twofold. It's the power of Mexico is such a great mining country. There's so much, skilled drillers, skilled engineers, skilled all the support systems for mining. So we have always tried as a company to underpromise and overdeliver, and long may we continue to do that. I think, that's and then geotechnically, we're it's a bit detailed, but like we're talking about keeping 25 by 10 meter size stopes open. The mining costs at Ana Paula are going to surprise people how low they can be relative to industry standard, because they're big stopes in competent rocks at shallow depth. All that means more margin, more profitability to come out of Ana Paula.
Okay, and the total resource size is a little over 1 million ounces, if I recall correctly. But you plan to grow this to 2 million ounces. Is that correct?
Yeah, I think we can get. I've always said, I think that 1.5 to 2 range. I'm quite comfortable we could get there once we complete. It's more drilling than this, but continuing to drill. I think that's in the shallow part of the deposit. And then the reason that decline was going in was the deep zone. There's holes like 13 meters at 29 grams, 40 meters at 6 grams. A fifth to an ounce material in these deep holes, but we need to complete the decline to drill that off. So Ana Paula has the potential to be as big as its neighbours, and its neighbours are 15 and 20 million ounce deposits. We just need to continue to drill it. So I think we can get to that 1.5 to 2. Comfortable at the bottom end of the range, optimistic at the top in the shallow part of the deposit. And ultimately, how big Ana Paula becomes is a function of drilling and getting that decline in as a platform to drill the resource that's open at depth.
So I guess final question, if somebody has a question for Charles Funk, go ahead and ask to speak, and I'll activate your mic. But like my final question is, you're building a real mining company. Like this is not a junior explorer anymore. Like this is actually a real mining company. And always the key is the people, the management team, who your technical people are. And I just, I'd be interested to hear you walk us through maybe 2 or 3 of the key players that are going to make this company great, in the next couple of years.
Yeah, you're spot on. It is all about the people. You're right. Our clear strategy from the day we founded Heliostar is to build a multi-billion-dollar, mid-tier gold producer. And I really enjoyed, and you understand it inherently, but you mightn't have the language. This sort of arc that we've been on, where good people attract good projects, attract good people, open the door to more projects. And if if you tell our version of that story to introduce a couple of the really key people, starting with our VP of projects, Sam Anderson. Sam spent 17 years at Newmont, lived everything from exploration to mine reconciliation, was heavily involved throughout the life of starting to steady state production at the Merian mine in Suriname. And I give Sam the particular credit for seeing the potential of the high-grade panel at Ana Paula. Everyone else had looked at it as an open pit, and Sam's the one who saw that there was a lot more ounces to be had and a lot more profitability to be had by going underground. And it's one thing to say that, then he turned around and delivered all that last year, sorry. And so Sam's been with Heliostar since the beginning of the company. And then as we were talking to people and looking for a COO who could help us build Ana Paula and take it forward, the attractiveness of Ana Paula opened up the quality of candidates than you'd typically expect to come and work for a company like Heliostar. And we got really fortunate that Greg Bush joined us as our COO in December last year. And Greg's built mines in Mexico, particularly the Dolores mine for Mine Finders. He's operated mines in Guerrero. He was the SVP for Equinox in Mexico. And he was the COO of Capstone Mining for 9 years. So multi-asset, multi-jurisdiction, running and operating these businesses. And I've said it a few times, we would not have been able to do the Argonaut transaction if we didn't have Greg in the seat before that came across our plate. So good people, recognizing good projects, attracting good people has been the secret of our growth to date. And watch this space. There'll be some more good people we get to talk about very shortly joining Heliostar.
Yeah, I was just going to say you're going to have to build a bigger team. So yeah, I guess you're in the process of that. Final question, Charles. I think this is an important one for all investors in the sector. How much cash does the company currently have, and what will your financing needs be as you build a bigger mining company?
Yeah, not a short question, so I'll attempt to answer it briefly. Between undrawn debt facilities and cash, we're somewhere between 11 and 12 million Canadian right now, but it's a little unusual in the sense that the subsidiaries in Mexico that we're acquiring are building cash up in them, but we don't have access to that till the deal closes. So the strict answer, Heliostar alone, between our undrawn debt facilities and our cash, is 11 to 12, plus whatever may or may not be in those businesses shortly when we close in early November. The assets are cash flow positive and forecast to continue to be cash flow positive going forward, with our plans to ramp them up next year. We, in terms of our cash needs going forward, we have two approximate 50 million capex projects coming online. One mid next year in the expansion of the Colorada pit that is permitted, and secondarily phase one of Ana Paula. They'll both be roughly in that ballpark, subject to those studies coming out. So what I like, and we started the conversation with heavily discounted gold ounces. I think that's the case when there's no viable pathway to production. What I love about our production growth is their capexes that we can clearly afford as a company. You know, two 50 million ounce steps next year, so $50 million steps next year, that can cumulatively bring on 100,000 ounce production. So we're cash flow positive today. We have manageable capex steps coming online next year to become a producer that should be worth significantly more than our market cap today.
Perfect. Charles Funk, I appreciate the conversation, and I look forward to speaking again, perhaps when you have, the results that you alluded to in the next, 3 to 4 weeks.
Yeah, thank you. I think it's going to be fun. We're going to have drill results from Ana Paula. Once the deal closes, we'll have drill results from the Colorada. And I've said to a few people, I think our re-rate, we're re-rating nicely now, but I think if you look at our peer group, we've still got a way to go. It comes from production guidance in 24, the economics of the La Colorada expansion in January, and 25 production guidance in January. So November to January is going to be a big few months for us in truly getting the valuation that I think we deserve.